I was there when the first PC came out. I used this tech to solve problems in banking, just hit me at the right place at the right time.
How do they know that you were the right guy to give tech stuff to? Welcome to Money Mavericks, the podcast where we explore the dynamic world of finance, investment, and entrepreneurship.
I'm Kirk Drake.
And I'm Daryl Hicks. Together, we're here to bring you the latest insights, expert opinions from the trailblazers who are redefining success in the financial world. Mr. Charles Potts, thrilled to have you on the Money Mavericks podcast with us here today. How you doing, sir?
I'm doing great, Daryl, and thank you so much for giving me this opportunity. I appreciate the patience and finding some time in our busy calendars to do this.
Well, you've got a lot going on. You're a prolific guy sitting at the intersection of, fintechs and community banks, things that are very near and dear to both Kirk and I's heart. And so we've been really excited, looking forward to this conversation.
You might be the hardest one we've had to schedule.
Well, you know what? If you keep moving, they can't find you.
Yeah.
That's absolutely true. And we talked about this before we pressed record, but I absolutely love the Masters shirt. If I'd have known, I'd have gone and grabbed mine, and we could have been twinsies here. But yeah, we both share a passion for golf and Augusta in particular. So that's great. And I know you're coming to us live from you are in Atlanta today, right?
The ATL. We are here in the ATL.
Amazing. Good stuff. Well, as usual with our guests, I'd love to kind of start out with a bit of an origin story. I mean, all of us, born naked, coming out of the womb, it's a meandering path that gets us to where we are. And a lot of the audience are on like various stages of that journey. And I find that hearing these stories and some of the skill and the luck that happens along the way can sometimes give some really interesting nuggets for people to learn from. So how does Charles end up where he is today working with the ICBA?
This is one of those journeys that as I've really moved into this role, I've had a chance to reflect back to your question, how did I get here? And to a large extent, it is an amazing, opportunistic point in time that I just happened to be, really at the right place at the right time, the right age and the right environment, where so many things were happening in the late 70s and early 80s that gave me opportunities. And frankly, working with and for some amazing mentors who took a chance with me, that has given me the foundation, really, this career that I've been very fortunate to create. But I say this because a lot of times when I'm talking to bankers, I tongue in cheek ask this question, how many people actually went to school to be a banker? And almost nobody goes to school to be a banker. And I come up with a hypothesis for a lot of bankers, especially males, and sometimes, a little bit older males, that air conditioning was the number one reason many people got into banking. And you start thinking about it when you're in college and you're working on a landscape crew or you're working on a construction crew, and somebody says, hey, there's a teller job open at the bank. So I had that. I had my mother. I was working my way through Georgia Tech, and my mother, who was working at a bank, called me one day and said, hey, there's a job opening that might work for you. Now, this is December. I was working on the baggage ramp at the Atlanta airport. Cold, wet, nasty December day. And she says, and it's inside. That was my desire to go find a job at a bank. And the next thing I know, I'm in a place where the technology evolution, right? This is mainframe to mid-range to PCs, all happening in the early 80s. And I just happened to be that kid like Mikey in the Chex commercial. We're like, hey, give it to Charles. He'll try it. And through a number of series of opportunities in the banks that I was working for, I really found that I loved the technology side that was evolving. And it led me to some just amazingly great opportunities and cool mentors. And there's a film in Peter Sellers was in called Being There. He plays Chance the Gardener. And I oftentimes find myself like Chance the Gardener. I just kind of look around and go, wait, I was there when this stuff happened. I was there when the first PC came out. I was there when Gates and Mitch Kapoor and all these guys were inventing, software and spreadsheets and everything. And this confluence of how do we use this tech to solve problems in banking just hit me at the right place at the right time. And ultimately, that's where I'm at today. How do we use this technology that's evolving at light speed to solve real problems for community banks? And that is the ethos that I've experienced and lived with and grown up with.
That's fascinating. And so you and I share some commonality here. I was, in the 80s, just coming into this field, and everyone was kind of looking at me as being like, oh, just give it to Daryl. He'll figure out what to do with this tech. I'm curious though, Charles, how did they know you're coming into these banks, and you framed that up nicely, mainframes, PCs, all this stuff is just coming of age. How do they know that you were the right guy to give the tech stuff to?
It's not about me. It's ultimately about results. And if we could demonstrate real results. So here was the first problem inside the bank that I was given. So in August of 1981, and I tell this story oftentimes, and I show this picture, August of 1981, IBM rolls out the very first PC, very first commercial PC. The bank I was working on was a big IBM shop. All the other Atlanta companies, Coke and Delta, all the big IBM shops. IBM's like, hey, we're going to take you to Boca Raton, Florida and see where we make the PCs. Interesting punchline. You can still drive to the office park that had the very first assembly line for the IBM PC in Boca Raton, Florida, and peek through the windows and see where this stuff happened. So we get to go down there. I'm just, I'm working my way through college. So I'm in, an engineering technology orientation, and we get teams of us from my bank and these other companies. We go down there and we actually get to pick our PC up off and fly it back on the chartered flight with us sitting back in the plane. And then you come back and you start working that summer, figuring out, okay, let's create a team to create a project to try to figure out how to deploy and apply this technology to what we're doing in banking. That very same year in 1981, Fannie Mae started rolling out their very first mortgage-backed security products. We were a huge mortgage servicer, Fannie Mae originations. And so we're like, okay, let's go look at how you do these securities. How do you package securities? And is there a way to use this technology to improve that? Now, we had figured out through our work effort, it took about 17 man days in the old ways with mainframes, computer and green bar, adding machine tapes, all that stuff. 17 days to 17 seconds. That PC forever changed my view of things, and everybody inside the bank, goes to your question, saw what it could do. So ultimately, solving problems in a creative, innovative, efficient way changes everything. And so it is the proverbial, proof is in the eating of the pudding. I firmly believe that our ultimate success in this kind of technology and to the FinTech entrepreneurs who might be listening to this, ultimately, you got to be real clear about what problem you solve. No shiny objects. There's a lot of shiny objects out there. Go solve a problem and prove it.
Yeah, I love that. And by the way, I love that you used that the right way. A lot of people say the proof is in the pudding, but actually it's the proof of the pudding is in the tasting. I'm a bit of a pedant for that kind of stuff. So
yeah. Oh God, that you used. That's one of my favorite words.
So this is a really great segue because obviously you're here at the real sort of inception, like it's ground zero. Tech is coming into banks. And I love this framing of know the problems to solve. A couple of jumping off points from this. I know you know a lot about the various cores, right? Fiserv, FIS, Jack Henry.
Been very, as I tell people, I've worked with, for, or against pretty much all of them in my career.
Yeah. So I'd love to know from your perspective, what kind of behaviors do you think most correlate with getting speed from pilot to contract? Like you talked about fintechs come in and solve a problem. Let's assume that the fintech knows what the problem is and they've got a solution that's reasonably credible to solve that problem. What kind of behaviors do you think most correlate on getting speed from pilot to contract? And how should fintech founders kind of design around those behaviors?
Yeah, look, strategy dictates everything. So, I oftentimes, and our team talks about the fact that, banks are snowflakes. They're all different, yet they're all still snow. So there's some commonality there, but there's some nuance and some difference, right? The the ag lender in Minot, North Dakota, and the med tech banker in, suburban Atlanta. They're both community banks, but they're vastly different. So they have to have a very clear orientation around their strategy, and the fintechs need to understand that. The worst thing that people in sales, and I know Kirk understands this, and we've talked about it before, is ask questions. They'll tell you. Discovery is everything. So for the entrepreneurs to move faster from first contact to live to revenue, they've got to be really clear that they understand what the bank's strategy, goals, and objectives are and how they coexist there. And oftentimes with, some of the smaller banks, it's more a function of when, not if, because they can't just do everything all at one time. They got to sequence this stuff properly. And there's no shortage of desire on the part of the community banks to do these things, but they got to do them in a very thoughtful, progressive manner with the right resources. And so while you may have the, greatest thing since sliced bread, you may be second or third or fourth in line to the other things that they must do or have to do in order to be able to take advantage of what you're offering them.
On Money Mavericks, we don't just talk about making money. We explore the innovative strategies and bold decisions that drive real change. Whether you're an experienced investor, a budding entrepreneur, or just someone looking to make smarter financial choices, we've got something for you.
Every week, we're going to sit down with industry leaders, visionaries, and mavericks who share their journeys, challenges, and breakthroughs, from contrarian views on market trends to the secrets behind building a successful startup. You get an inside look at what it takes to thrive in today's economy.
And we promise to keep it real, engaging, and most importantly, actionable. No jargon, no fluff. Just straightforward conversations that you can apply to your own financial journey.
So get ready to challenge your thinking, expand your knowledge, and take control of your financial future. This is Money Mavericks,
where we turn financial dreams into realities and mavericks into legends.
And a great point in that I always see, especially early stage fintechs, the founder are so eager to tell you about this awesome, slice of bread that they made, that they forget to ask if you're hungry. They forget to ask if you're gluten-free. If they forget to ask the qualifying questions, and they're trying to sell everything to everyone. And I was like this when I first started my first fintech. And the sooner you accept that your solution will not be for all 9,000 financial institutions.
Right.
And your job is to figure out in the early days, how many will it be for, right? And what are the parameters that make you cut the line where they have the problem, especially in the early days. You want to know the profile of the people who have the exact problem that you solve and how to ask the questions about it so you don't waste your time doing a demo. Because community bankers and credit people are nice. They're going to look at your baby every single time, whether it's a fit for them or not, right? And they're generally aren't disciplined enough to say, I'm only looking at things that look like X, right?
Exactly. Well, one of my team members famously reminds the fintechs that come into our programs, God gave you 2 ears and 1 mouth for a reason. So be a better listener.
But
be a better listener.
This comes back to, like, you guys are both saying something that triggered a thought for me. How are we supposed to find out? Like, how do you go through that discovery? Like, I understand the context. If you can get into the room and in front of the right people, obviously you don't want to be doing that one by one. That's really poor experience.
Banks can be sold to every single day. I did a little back of the envelope analysis a couple of years ago with some of our more innovative bankers, and through every channel imaginable, even direct messages on Facebook. These bankers are getting bombarded with 12 to 1,500 outreaches a month, over the transom, through the mail, phone, you name it. And to your question, Daryl, the real way is to find those places, sometimes like the ICBA innovation programs, those places where banks feel comfortable in a trusted and safe environment, asking and answering those questions, because they will. If you get a chance to talk to the bankers about their pain, about their challenges, they will share, they will tell you. And even more importantly, they will talk to each other. So that whole peer group thing is massively important to these financial institutions. They want to know, what my buddy down the road is dealing with and what the banker over in the other state is dealing with. They want to know they're not in the boat by themselves. They're not out there on an island. So they are willing. They just don't want to be sold to.
Mm-hmm. Yeah, exactly. Which is why solving the pain point, solving the problem, but knowing how to frame. My own experience around this was we thought we had a solution that was going to be perfect, and it was close enough that it was resonating with the target audience that we were first selling to. But just all of a sudden, out of nowhere, they brought up a theme of something completely different that we weren't expecting around dispute resolution in payments. Yeah. And we're like, yeah, well, that's kind of, and the temptation was to be like, well, I can't boil the ocean. And so, but this was ancillary to what we were doing. And it just seemed like such an easy win, but massively, massively value to the client. You could feel the pain that they were having around this. It was palpable to them. So it's like, okay, then we had to go back as a fintech and have this discussion. Does it make sense for us to widen the scope just a little bit so that we now cover this thing? Because I think it's going to help with adoption and get us that speed of getting a POC greenlit and then, getting it through to adoption.
The other thing, I'm sorry, Kirk, the other thing that from that, which oftentimes we tend to miss in the quote unquote sales cycle, is, are you giving that prospect something of value they can take away from that conversation? Are you bringing them a nugget, a kernel of information, some insight they may not have possessed before you showed up in that point of intersection there? If you're supposed to be the knowledgeable expert on dispute management or BSA and AML, are you actually sharing to the point where the banker feels comfortable that, wow, this is a relationship I might want to dig deeper into?
Yeah. Building trust and credibility for sure. Sorry, you wanted to jump in with something there, Kirk? Or
no, yeah, I think it's the core. I love that of, always be adding value in the conversation, because you don't know the reality is what you start off selling, what you end up selling, end up being different. And you're probably going to go back to some of your original people with a completely different product along the way.
Exactly.
Because the journey that we think we're on is to convince them that they need the thing that we're selling. And most of the time, there's a huge gap between the value we think we create and the value that they get, right? And the sooner you figure out the value they get, the sooner you cut the line on sales.
That is spot on. We say this a lot of times with some of our programs, that as we've moved and matured over the years since we started our accelerator program, our FinTech accelerator program, we've gone from startups to early stage to now more growth stage companies. And what ends up happening in that environment, to Kirk's point, is you're really refining your proof of value. Not your past proof of concept. Now is proof of value. And can you make that value proposition truly resonate with those prospects?
Yeah, I love this. It makes me think, though, I hear and I believe your perspective that banks are all snowflakes, right? And that they have different priorities. But I got to believe that there's still some commonality right there. Like you talked
there's
about
a must-do. I mean, absolutely. Look, it's the most highly regulated industry out there. So there's stuff they must do, right? There is third-party risk management, third-party vendor management. There's, regulatory compliance. There's quarterly call reports. I mean, all of those things they must do. It's the differentiation above and beyond that. What community do they serve? What are the products and services that they're great at? What does their marketplace want from them? How do they better serve those communities? And as I said, if you take that ag lender in North Dakota and that light industrial manufacturing lender in East Atlanta, 80% of the stuff they do is the same. 75, 80%, they have to do. It's must do, have to. But also what's interesting about that, if you look over the last few years, it's probably in those must do, have to areas that there's more opportunity than ever before to create better efficiencies. That's where a lot of the tech is focused, that back office stuff that historically we've applied brute force, manual labor, redundancy. God, we've gotten this long and nobody said AI, but can the evolution of
it's coming, trust me,
intelligent tools provide more efficiency? Because I'm going to toss this one to Kurt, because you really only have 3 levers when you're selling to a bank, right? Can I reduce costs, make them more efficient, increase profitability? That's it. I mean, that's
there's the 4th lever in credit unions, which is which is a mythical lever, in my opinion, that people get caught on, which is good for the member or good for the.
Well, it's how do we measure that? But that's
right. Well, right.
I like measurables.
Yeah. I mean, I think the reality is if you are delivering good, you end up with income, balance sheet, all the rest of it up in there. You don't actually have to measure it separately, in my experience. Your consumers will tell you with their foot.
Well, that's right. And look, what's happened, some intentionally, most organically, is the financial services industry and the community banks in particular have recognized that as we're in 2025, and I'll go back to who went to school to become a banker. The talent retention and acquisition is becoming harder and harder for banks. So how do I make my existing employees more valuable? Well, I get rid of that redundant stuff that I can automate and free them up to do the more valuable things. That's, I think, where the low-hanging fruit is that oftentimes a lot of the entrepreneurs miss, because you're not going to go in and sell them on, I'm going to help you get rid of Susie or Bob or John.
Yeah.
I'm going to make Susie or Bob or John more efficient and more valuable to them because we need to extend the runway.
I'm so happy that you're touching on this theme. And I do want to get into talking about AI and some of these tech and what you see from your seat. But just as a note to double down on this, there is a paper that was just issued by the National Bureau of Economic Research. And the TLDR on it was that, especially for the lower skilled workers that we have within our organizations who are most at risk of being displaced with some of these advances in technology, the faster we can get them adopting these tools in order to boost their productivity, the less likely they are to be replaced eventually. So there's something urgent and decent and humane about giving them these tools as quickly as we can.
It's very, very important. And, some people have opined, and I believe this dovetails with what you just said. It's going to be the worker with those new skills is going to displace the worker without those skills.
100%. Yeah, exactly. And so like fighting through the resistance, I think these efforts and some leaders or regulators to kind of slow this stuff down, actually, ironically, is going to be hurting more people than helping. But anyway, before we go down that rabbit hole, I did want to come back to one of these themes. Even though a lot of community banks are snowflakes, you talked about there's still a lot of commonality in there. I mean, you review 1,500 fintechs a year. I'm looking for, what are the commonalities that you see? Like, what are the top 2 or 3 sort of like bank ready filters that eliminate, 80% of the ones that you're looking at real quick? Like, is it around security, vendor risk, core integration, revenue model?
Cybersecurity is never getting less.
100% agree.
Never getting less. It is additive. It's growing. It only gets more complex, more complicated. And so cybersecurity is always top of mind. It's always a top 3 thing. So part of our process is constantly interviewing, evaluating, surveying our bankers, industry pundits, find out what really are these issues. So as we're looking at our selection process, we've got a really good grounded framework that is born out of the real pain that bankers face. Cybersecurity is always a top 3. We'll continue. Hand in glove with that goes fraud of all kinds, fraud, risk management, and obviously check fraud. Who knew that we would be talking about check washing in 2025? That we're bringing, people are going back and rewatching, Catch Me If You Can to learn about this. But check fraud has just reintroduced a whole nother perspective on how do banks really address growing fraud. Those things are not getting less. They're not going away. And after you kind of take those top 2 big things out of the way and you deal with what are the new kind of regulatory and compliance must-dos kind of things, if there becomes some meat around 1033, the open banking rules that are being reevaluated, where do we go with the Genius Act and the rules that are, in promulgation there? those kinds of things will introduce the need for new solutions, new reporting, new data capture, new analytics that go into the risk and compliance side of the bank. The other side of the equation is in this efficiency. How do I continue? I've got an industrial engineering, industrial management, operations, education, and I'm always thinking about continuous improvement. And the banking world is the optimal reference of an assembly line. Everything we do is building a product. Raw materials, manufacture it, get it out, sell it, service it. It's an assembly line. You can look at everything from a loan to open an account. It's an assembly line process. How do I continue to optimize every phase of that assembly line process? And where do I put in more automation? That's where some of the really new, cool entrants are playing. That's where this world of machine learning and RPA and predictive and generative AI can play some better roles. And then ultimately, as I move from the safer area of the back office, how do I take those really smart baby steps, well thought out, customer-facing actions that have the highest risk, the highest regulatory oversight? Everybody should, everybody knows that. But I need to do it in a very strategic and thoughtful, guarded and protected way with some, trusted solutions. I can't, and it's never going to be a set it and forget it kind of thing. There's always got to be a human in the loop aspect to that. So those are the areas where we see continued opportunity. It can be granular subsets of that, like BSA AML for new account opening or for card processing. And I was talking to a reporter the other day, and look, we know over the last 25, 30 years, what we've done is we built these layers. We've taken this assembly line and we've cobbled together 6, 8, 10, 12 different vendors to solve my problem. And today's world, I'm now consolidating a lot of that. So a lot of banks are looking at, how do I take out 2 or 3 of the players and consolidate some of those functions? So all of those things are happening, continue to happen, top of mind. And as I said earlier, they lend themselves to a sequencing orientation that most banks have to adopt.
Yeah. And oftentimes you can see in the regulatory data who has the biggest pains for those things based on delinquency, based on, growth, whatever it is, you can get to a hint of that. So you brought up AI, which we were going to if you didn't. A single use case of AI that's got you really excited so far that you're seeing in that same vein of how you look at this.
Thanks for tuning into this episode of Money Mavericks. We hope you found it insightful and inspiring.
Don't forget to subscribe, like, and leave a review on your favorite podcast platform. And be sure to share this episode with someone who needs to hear it.
Stay connected with us on social media and visit our website for exclusive resources, episode transcripts, and more.
Until next time, keep pushing the boundaries, making smart moves, and turning your financial dreams into realities.
You've been listening to Money Mavericks, where Mavericks become legends.